As you've noticed, we have a whole bouquet of financial services here. We have banking services, regulators, a former governor, and we also have the insurance sector, we have the pensions, you have the capital markets, and we also have a payment system, also a regulator from the National Bank of Rwanda. But more so, we also have the rich level of research that comes in this panel from Professor Ndulu, who has been working extensively in the central banking area and research in economics, and currently is undertaking the same role. And I'll start with him, given the fact that he's close to me here. We've had a lot of discussions in the past day and a half now about fintech, the opportunities, but also the challenges and the risks that we are actually seeing from the regulatory perspective. But also I want from Professor Ndulu to touch also on the consumer perspective, on the demand side issues relating to fintech, the opportunities that they bring, and he will also touch a little bit on key enablers, going down to the fundamentals of what can we do to ensure that we really see that these fintechs will provide value not only to the socio-economic development, but also value to financial inclusion. Welcome, Professor.
Well, thank you. First, also to join others in congratulating CBK and the Singapore Monetary Authority, I think, for this very remarkable opportunity. Now, I would like to begin by just reminding ourselves that as we celebrate, the remarkable progress we have made, particularly in growing access and reach of financial services. And we have done so, I think in the last 10 years, the last decade, virtually on average now, access to financial services, formal financial services in low-income countries has almost reached 80%. And not only that, virtually all regions have caught up to the leaders. But I think there are two major challenges that we need to reflect on as we even think about how we move with regulation going forward. The first one is we have almost 1 in 4 Africans and 1 in 4 low-income country citizens who are not yet, or who have not yet been reached. So virtually when you look at all the surveys that have been done, whether it's FinScope, FinAccess, or even Findex, you have that group of almost 20-25% that has not been reached. And universality, as you know, is one of the key goals that we have. So that's one challenge, to reach that group that still remains excluded. I think the second major challenge, which also should shape our regulatory stance, is a huge gap between access and utilization. Actually, data, again, depending on what you read, is between 1 in 5 and 1 in 4 who actually have access to financial services, whether bank or mobile, are actually active users of these services. So, and we know access is only a necessary condition for impact. You must be able to use in order to be able to really have the impact in terms of change in livelihood. So these two challenges still define a major sort of set of issues that regulators have to pay attention to. And I think there are 3 main categories that I would like to flag, and then I will focus mostly on one. One is affordability, both of the means to access, which means the platforms, and as well as affordability of data. Both those remain a huge constraint to low income and poor households. In fact, the estimate is that it takes at the minimum at least 2 to 3 months worth of income to get a simple smartphone. This is notwithstanding the fact that the cost of smartphones over the last 5 years has fallen by 50%, and the cost of making a call has fallen by 70%, is still inaccessible to as many as 1 in 4 that we are targeting to support. And affordability in particular of smartphones is extremely important. We heard yesterday that access to internet still remains at only 35% globally. In African countries, actually the average is much lower than that. And you know, you can't have meaningful use of products really unless you are able to do more than P2P, which requires data and the means to use that data. So affordability is number one. Number two is capabilities of users. This is the demand side. We very often focus on the supply side constraints. We forget the fact that users have to be able to actually not only accede to those products, but be able to understand and be able to apply them in a meaningful way. We heard about financial literacy as a major constraint, which still remains a major challenge. But capabilities should not just be addressed through literacy side, but also production of products that require less, if you want, specialized skills in order to access those. So you can either raise your capabilities or lower the threshold of the requirement in product design for those type of skills. And that requires looking again at business models just to see how one can reach that. The third, and this is where I'll maybe spend a little bit more time on, is the ecosystem. First, I think, is just the attitudes towards innovation by regulators. It sounds simple, but a lot starts with the mindset. Unless one is willing to really take a risk in allowing innovation sometimes to lead regulation, you will not actually allow innovation and trial of solutions to proceed. This is not to say one should be a maverick, and we weren't mavericks in East Africa. You still need really to adopt sort of the learn, the test and learn, if you want, stance to this. But here is a catch, I think, as we move forward. We were much more in the space of access, and that's where the space of MNOs, to a large extent, they are large, they are clearly identifiable, and we can deal with those in much more definitive ways. But when we come to utilization, this is the space more of fintechs that typically develop products, and these products typically, and solutions are not yet tested, and they have to be tested in an environment which protects also potential users. And I think that's a much more challenging environment for the regulators. And it requires not only being able to have that kind of mindset of allowing innovation, but also creating, I think, instruments for incubation while making sure that you minimize any negative consequences to the consumers in that particular period. So capacity of regulators to understand products and to be able to quickly make a judgment is quite important. And finally, is partnership. We heard today, and I think the last two conversations with regulators was very, very relevant. The foundational stack is nothing more but making sure that you create space for interoperability amongst the wide range of players involved in delivering financial inclusion. It requires making linkages. It requires not only working on the government side, but also making sure incumbency does not hold back innovation. And incumbency, this is essentially just the fact that whoever is the first mover shouldn't restrict the possibility of further innovation coming into space. So let me stop there for now.
Thank you very much, Professor Ndulu. I'll go directly and probably pick up from there in terms of looking at the demand side issues, also from the insurance sector. Mr. Kiptum, you work very effectively in the insurance sector in Kenya to ensure that insurance penetration in Kenya is upheld and probably increased. As we know, across the world, Africa lags behind in terms of insurance penetration. So what are you doing in Kenya in terms of enhancing and deepening insurance sector to reach out to the underprivileged or unbanked? And what fintech solutions are you applying in terms of either product design or opening up to the fintech, while at the same time regulating them effectively? Welcome, Mr. Kiptum.
Thank you very much. I think over the last few years, the authority has put in quite some effort to ensure that insurance products are available for common mwananchi. Also ensure that these products are useful and that it serves a useful purpose, or the utility for the customers is attained. And if you look at what has happened in the recent past, is that there have been a number of firms that are distributing insurance products digitally within the country. Of course, we know that the penetration level is not quite what we want. If you look at the East African region, for example, at Kenya, close to 3%. The rest of the countries are below 1%, which is something that the regulators in the region are working hard at to make sure that it improves. And you can only improve it by then providing access, affordability, awareness, and of course, creating the need by teaching or creating awareness on Mwananchi that these things will save you. But as it is now, if you look at our country, for example, if somebody's house burns in Kakamega, for example, the community will come build that house. So does that person need insurance? So those are the things that we need to get them used to move away from that kind of relying on the others, because society is becoming more individualistic as we move along. And we need to build resilience in them and that they can be able to afford to protect themselves going forward. We also find that there have been a number of other items to introduce peer-to-peer insurance, pay-as-you-go insurance services, which are coming on board. The authority also has worked with other financial services providers to introduce area yield index that will rely on satellites to make sure that if there is a crop shortfall in whatever it is in the country, then satellite will be used to determine the kind of loss and how they will be compensated. There have also been other moves. Livestock also has come in on board, and the area yield index, as I talked about. You will also find that some insurance companies have now introduced chat boxes that would then pick up their customers and discuss once you make an inquiry and give you as much information as you'd want. There have also been other new products like M-Tiba that you create a wallet. That wallet then you put in some savings. Then it will come in at the times of need or when it is handy. So as it is now, insurance products are being distributed both digitally, but we haven't reached where we want to be. And this is something that we're going to work on with other fintech companies to ensure that we get there, even in terms of insurance processes of distribution, settlement of claims, and determining what quantum to be paid. digital is being implemented. Then finally, on our side as the regulators, we have also put in a system that enables us to access data from the companies, analyze that data, and then provide feedback so that we can be able to guarantee or assure customers that they are being protected and that they will be able to get the protection that they have been promised by these insurance companies. Thank you very much.
Thank you very much. Probably I'll come back to later to you and see what other demand products do you have and whether there's research behind these new products that you've mentioned, a long list that you've provided, which is quite innovative. And I'll go back to a central bank regulator on the banking sector side, Mr. Karamka from National Bank of Rwanda. And you've been playing a key role in providing infrastructure and supporting the market in Rwanda to ensure that fintech players do take a place. And how do you ensure that the fintech community in Rwanda actually is given the space to operate and to offer these services, but at the same time ensuring that your core mandate as a regulator is not compromised in any way in terms of efficiency of your payment systems, stability aspects, and monetary policy to some extent. Is there any risks that you see with this fintech? And if so, how do you effectively mitigate, and what success factors do you want to mention? Few of them. Welcome, Mr. Karamuka.
Thank you very much, Kennedy. I think I will start commending the professor. In fact, he tried to summarize the key areas of intervention in this particular sector. So when you look at the front we are working on when it comes to fintech in general and the payment industry in particular, you'll find that normally we have, I can say, classify 4 fronts. Build infrastructure, come up with products that are convenient and affordable to the population, but also increasing the access. Second is also to see how we can increase the propensity of adoption through different measures like financial literacy, build capacity, affordable services, etc. So that's also very important. That is about so build trust, because when you're talking about money, it's about trust. How do you build and maintain trust in terms of ensuring having a system that is well secured, proper cost mechanism, consumer protection, ensuring financial integrity. So that's some of the aspects we're also looking at. But the third, what is very important, whatever we're discussing about development in financial sector is based on innovation. So how do we create that enabling environment for innovation? So coming to how we work with fintech, first of all, I can see it in 4 angles. How, first of all, we put in place infrastructure, basic infrastructure that can support any additional service. That's something we've done. Yes,
let me just touch with you because you're my friend, and
yes.
I can bully you a little bit. So what type of basic infrastructure do you mean?
That's what I'm saying. It's about ICT and the financial infrastructure. Let me give you an example. If you don't have a proper, robust ICT infrastructure, whatever financial services will bring, it won't be possible. So we've seen, for example, having a good coverage in terms of 3G and 4G in a hilly country like Rwanda. So that's very important. So, and how do we ensure that also the data, I think this was touched by the professor, are affordable to everybody. So that's very important. We also have basic infrastructure in terms of financial services. Having, for example, the entire interbank system that supports the retail system. The retail payment system is also very important. For example, we are working with the current industry to build an interoperability framework where microfinance, banks, MNOs will be able to integrate to each other and be able to transfer funds from any account. And on top of that, we shall also integrate other overlay services that are provided by fintech company. So that's what I was talking about, infrastructure that is very important. Second, about the regulatory framework. On the regulatory framework also very important. If you look at what we've done, we've done a good job. And if I quote the last report that was issued by GSMA, I think it was presented in Abuja, you remember. They have shown a positive relationship between a high regulatory, MFS regulatory index and the adoption on MFS. So when we look at, for example, where Rwanda is sitting today, it has been among top performers. So what we've been done here is, when we look at what we have been doing, maybe Rwanda can be one of the countries that are reviewing frequently the regulatory framework. Because for us, we take it as a learning process. How do we adapt to market dynamic? I think Professor talked about a mindset. How do we ensure that we put the regulatory instruments that supports the market development instead of having just rules that are there? So I can give you an example. Even after consultation and establishing a particular instrument, we even go back after that and assess how it is being implemented, how it supports the market. Even, for example, when it comes, for example, to a particular application we receive, that's for us an opportunity to review and see if really the regulatory framework we have is appropriate to the market. And this has helped very much. That is about the role of the government. We've seen the government also playing a good role in terms of as a payment service user, leading by example, giving the direction, the guidance on where we want to be. And this has been very, very, very supportive. That is about collaboration. I'm proud to see, for example, when we sit with different players in the market discussing issues in the industry. I remember, for example, 2 months back, we've been discussing issues related to connectivity of point of sale, where you find banks, MNOs, regulators. I'm talking about, when I'm talking regulators, financial regulator, technology regulator, sitting together, analyzing the entire value chain and arrive to how we can support this. And this has been very well. Or when we sit, for example, in a fraud forum, discussing with fintech, banks and other players on issues related to fraud and to come up with solutions. And they are implementing the recommendation without any supervisory enforcement. For me, that has been something we've achieved. So what just to summarize is to have that openness, but keeping in mind also to help fintechs, because what we've seen in the fintech industry today, they are doing a good job, but at a certain point of time, we need to help them in terms of guiding them on how they can improve in terms of governance, proper managing some risk, because some of them may not even understand the risks that are related to
Thank you. Thank you very much, John. I will get back to you in terms of discussing how deeply do you really facilitate this fintech to improve in terms of incubating them or probably having a sandbox of that context. I'll go directly to the Capital Markets Authority CEO, Mr. Muthaura. And I know you're running a very important platform, and probably people are also thinking about cryptocurrency assets, the new trends that are opening out there. But before we go there, I would probably want you to talk a little bit of the fact that you're also becoming more tech in terms of facilitating the fintech community, running up a sandbox. Can you really explain to why would a capital market authority really run a sandbox? We would expect that we'll just have people listing up companies, but now you're also running a sandbox. What's really behind that?
Thank you very much for that, Kennedy. I think when we look at our role, and I think this is very critical for regulators cutting across all emerging markets, that we carry both responsibilities for market regulation as well as market development. So in how we approach that market development mandate, it creates certain very real tensions within an organization around how do you make sure you're addressing in my perspective, investor protection issues, market stability issues, while still allowing for innovations and new to come to the market. Now, in establishing a sandbox, it's really based on, one, a fundamental recognition that the way the rules have been written for incumbent businesses. And to expect the very same licensing, regulatory, reporting structures to then apply to a business that is designed to be disruptive, designed to be fundamentally different from what already exists, means that we also need to take a step back and not bind our own hands with the regulations that are in place. Secondly, it's about creating a level of regulatory certainty for the innovators that are out there. It's one thing as a regulator to confirm your willingness to discuss, but a lot of the tension then comes from how long exactly will we discuss for? And as you look at the back and forth deliberations around policy issues, you can find the very market realities that innovation was responding to have fundamentally changed by the time the product has been approved. So creating a sandbox also allows us as a regulator to, from the very beginning, start a conversation around understanding what is the target outcome, what are the underlying risks that are going to be introduced by the introduction of this innovation, and therefore how do we start looking at building a mitigation strategy for that. I think it's a global reality that the process of legal amendments, statutory amendments, is very, very slow. So a sandbox environment then allows you, on the basis of a common understanding of intention, to allow the rolling out of a test of that particular solution, so that even in that process, as the regulator, you're better able to understand the reality of the risks. At the beginning of the conversation, it can be a very theoretical point on maybe this could happen, maybe that could happen. But when you're able to put it in a test environment, I identify, a defined scope of potential investors to be engaged, level of value to be involved, and also structures to deal with compensation should it go terribly wrong. Then you can really get into the heart of the product as a living being, and then start being able to be much more strategic in how you build the regulatory responses to that, and an appropriate environment for it to scale up in the longer term. So that really speaks to really the fundamental outlook we've had in setting up a regulatory sandbox. And it's been very, from our perspective, very well mirrored in our fellow peers across the globe. We're a member of the Global Financial Innovation Network, which brings together 35 financial sector regulators as well as associated businesses, companies, looking at how do we create this conducive environment, and how do we make sure that national sandboxes, national initiatives can then translate into supporting cross-border engagement, cross-border facilitation of scalable solutions. But ultimately, I think one of the key challenges we continue to see as a sandbox is in jurisdictions where we have separate sectoral regulators in the financial system. A sandbox in the capital markets can only address a solution targeted purely at the capital markets. But these solutions often have potential to address pensions, insurance, payment issues. And unless we're able to move towards the potential for a pan-sectoral sandbox, I think we will continue to see the full potential of these innovations not being able to see the light of day.
Now, thank you very much. I was just looking at the app to see if I'm getting any questions, but the questions that are directed to the app are more directed to the previous session, and they're all directed to CBK. Apparently, we may not take those questions because CBK is not on the platform at the moment. I'll go back and probably engage with the panel with one last round. I have 10 minutes, which is good, and these 10 minutes, I'll probably just take the liberty to discuss about risks. We all mentioned risk, and we can just touch on risk depending on the perspective that you want to address it. You may address it in terms of the infrastructure, on the supply side, demand side, or just the risk of the fact that it may also be an issue that is it really something that is going to touch on the financial stability? Is it a monetary policy risk? And when you look at that, also take into consideration that we didn't discuss in this 1.5 days in terms of platform economies, which like Grab mentioned a little bit of it, but this is where we're probably moving into, where you'd have one super platform providing several different services, like Mr. Kamuto just mentioned, in terms of the capital market products, where you have a platform having several other services being plotted together and offered by one fintech provider. So how do you manage such kind of risk? Any other risk that you see within this fintech? And I'll want you to respond quickly into that, and I'll start again with the same order that I had before, and I'll start with Professor Ndolo. Thank you.
I think one of the key risks, which also touches on affordability, has been, I think, the rather unstable fiscal regime in relation to fintech-related products, and particularly on financial services. Without mentioning countries, I know there is at least one country where out of every 100 shillings worth of revenue generated by a fintech company or financial, a mobile money company, 40 shillings actually goes back to government coffers. It has started to raise really not only the costs of the service to the end user, but eating also into the profitable margins for a number of these entities. And sometimes I think the tax base itself is not defined properly, particularly if it is transactional rather than simply the fees which are actually coming from that. You get to hear about this a lot more now in the discussions, and I think this is one of the risks that is definitely within the hands of the authorities to manage.
We take note of that. Unstable fiscal regimes. From the insurance sector, what risk really makes you not sleep at night?
Thank you. Insurance in itself is a risk mitigation strategy. So as we move into the era of fintechs and promoting fintechs and ensuring that they contribute to that distribution and mitigation of risk within society, the authority, of course, will be very careful, provide enabling environment to these fintechs, but ensure that they don't create more risks to members of society. So we'll be very careful, look at it, and of course you may be aware that we changed our supervisory framework in the recent past to ensure that we are more flexible as opposed to the previous rule-based regime. But then it doesn't mean that the risk is not taken care of in terms of distribution of those products and the underlying base of it. So fintechs will be encouraged, but without increasing the risks to society, and that assurance to society. Thank you.
Thank you so much, Mr. Kiptum. Mr. Karamka?
I think what I'm seeing in this industry, apart from the traditional financial risk we are used to, I'm seeing emerging operational risk, characterized by a hyper integration of different services. So a fintech, to provide the services, they need to access payment accounts, for example, and they need to link to banks and other MNOs, for example. So this is bringing really a big risk in this industry that we needed to address in terms of cyber security. The second risk I'm seeing is on the legal. We are all adopting this sandbox regulatory framework, which maybe we don't master the same way, and there is the risk of maybe having a kind of legal arbitrage where you may find some products are regulated, are licensed, are regulated, others are not. So this is something we need to look at carefully and see how we can address. The third is what my colleague just mentioned, where we are having now with innovative products, we are seeing hybrid products that may touch or may be under regulatory purview of different regulators, capital market, central bank. So how do we work together to ensure we don't have a kind of gaps or in terms of how regulate licensing or not even denying such kind of innovation because regulators are not working together. So that's what I'm seeing in this domain in terms of risk.
Thank you so much, Sean. Yeah. Mr. Madura Paul?
I think I'd see it at multiple levels. One, given the nature of this panel, I think there's the very real risk that if as regulators we're not able to innovate fast enough ourselves, there are going to be huge opportunities for leapfrogging for the continent that will never be realized. If we try to keep squeezing in innovation into legacy frameworks, they will never survive. And we will imagine that the opportunity for Africa's transformation through financial technology is just not being realized, but we're actually the ones who are creating that barrier to progress. Secondly is because of the complexity of some of these innovations, there is a very real risk that as we continue debating as regulators, because these innovations are actually responding to very real world market issues, they're actually growing. Even as they're waiting for us to regulate them, to give them clarity, they're growing. And by the time we do build an appropriate framework, we'll find that they're not actually able to be reverse engineered into what we think is a transparent, well-structured environment. So decision-making, delay in decision-making is going to be a very significant risk as we see this sector evolving. Certainly issues around cyber resilience and security are only going to grow, and that will go very much to how we are resourcing ourselves. Regulators used to be economists, finance people, accountants, and lawyers. Now they need to be, half the office needs to be ICT professionals, need to be data scientists. So we need to fundamentally shift the way we're resourcing ourselves. And finally, I think at a much bigger picture level, as Africa, we need to pay very careful attention to how we're going to control our data. Data right now is and will only grow to be the most valuable commodity in the world. And if we're not building appropriate structures for us to, one, be in control of that data and how it's going to be used, how it's going to be monetized. Secondly, how it's going to be protected and how we respond to global trends on data privacy. To also manage, not taking data privacy laws that are built on, assumptions that you already have details on people's addresses, people's financial statements, so you don't need all this other information.
to build financial models. We don't have that reality. So how we respond to data privacy will be very key, but how we ensure we retain ultimate monetization capacity of our data, I think is a very significant issue.
Thank you very much, Paul, for that. And before I bring back the mic to the MC, I'll probably just say one word that I've just learned from the regulators here. We're concluded with risks, but it doesn't mean that we're concluding very pessimistically. We are concluding with optimism in the fact that they opened up the session with opportunities that they see that the fintech have and hold for not only for financial inclusion, but for the overall public policy objectives of the regulatory side, from the regulator's perspective. One key word that comes out of this is they are seeing that the future regulator, which is now, needs to be agile, flexible, and adaptive in terms of how they will respond to the dynamic world of fintech. They're talking about moving away from rules, more on the principles, and not really going back to amendments on a daily basis, which you cannot really go into that context. So these are very progressive regulatory discourse that we discuss, and it holds a very bright future for Africa to have a great, thriving ground for fintech. A round of applause for them as they leave the podium. Thank you very much. Welcome, MC.